How much life insurance do I really need? A guide for Canadian families and business owners. One of the most common questions that we hear from clients at Safe Pacific is, how much life insurance do I need? And it's a good question because getting the amount right is just as important as having the insurance in the first place. Hi, I'm Laurent Munier, partner and advisor here at Safe Pacific Financial, and we specialize in helping Canadian business owners, professionals, and families grow, protect, and transfer their wealth efficiently. If this is your first time here, welcome. If you've watched our videos before, welcome back. So why is it important to know how much life insurance do you need? Well, whether you're starting a family, running a business, or planning your estate, having the right amount of life insurance coverage is critical to making sure that your loved ones or your business partners are taken care of in your absence. Too little insurance can leave your family vulnerable or force your estate to sell assets quickly to cover debt and taxes. Too much insurance, you may be paying more than you need to. That's why it's important to do the math and understand what's right for your unique financial situation. So how do you calculate how much life insurance do you need in Canada? Well, if you've ever wondered, how much life insurance do I need in Canada? Well, you're not alone. It's one of the most common and important financial planning questions that we get from clients. The right amount of coverage gives your loved ones peace of mind, financial security, and the ability to maintain their standard of living after you're gone. While the final number depends on your unique situation, there's a simple formula that you can use as a starting point to estimate your life insurance needs. Step 1. Add up all your outstanding debts and financial obligations. The first step in determining your coverage amount is to calculate how much you owe, because you don't want your spouse, your kids, your business partners stuck with bills that they can't afford. Your total debt might include your mortgage, car loans, credit card debt, personal loans or lines of credit, business loans or corporate liabilities. By adding all of these up, you get the baseline minimum for your life insurance that it should cover. So this way, your family or your estate can settle all debts quickly and cleanly without having to sell assets or taking on additional financial stress. Step 2, you want to estimate your family's future income need. If you're the main income earner in your household, your ability to earn the income is likely the most valuable asset that you have. So in the event of your passing, your family would need to replace that income so that they could continue mortgage payments, or cover monthly living expenses, or pay for education and childcare, or even just maintain their own lifestyle. So you want to ask questions like, how many years does your family need income support? Or does your spouse plan on returning to work? Or do you want to fund your kids' post-secondary education in Canada or somewhere else in the world? A common rule of thumb is either 10 times or 20 times your annual income. Now let me explain. In Canada, many financial advisors, including our team here at Safe Pacific, we recommend 10 times your annual income to support your family for a decade, or 20 times your annual income, which would be invested wisely, could provide income replacement indefinitely. So this strategy isn't random. It's based on real financial math. And here's a quick example. So for the example, you make $100,000 annual income. 10 times your income is $1 million. This supports your family for the next 10 years. The other way to do it is 20 times your income. So that's $2 million. If you invest that at 5%, it generates $100,000 a year in perpetuity. So that $2 million payout could replace your income forever without depleting the capital. It provides long-term financial security for your spouse and children. So here's another example. How much life insurance does a Canadian family need? Now let's break this down with real-world scenario. So you earn $100,000 a year, same as last time. You owe your mortgage of $500,000. You owe for your car or other loans another $25,000. And your kids' future education, $100,000. So here's the coverage calculation. So your debt repayment is $525,000. Your future education funding, another $100,000. And then your income replacement, your $100,000 times 20, $2 million. So in this case, your total suggested life insurance should be $2.625 million. Now, that number might be too high, that number might be too low, or that number might be just right, just like Goldilocks. With life insurance, there's no exact correct answer to how much you need. The number that makes you comfortable and lets you sleep at night is the right number. Now remember, life insurance is not just an expense. It's protection for your family's financial future. So if something were to happen to you, your family wouldn't have to move or change school or take on massive debt just to maintain their life. And then we get asked, is that much coverage affordable? Well, yes, especially if you apply for term insurance in Canada while you're young and healthy. Term policies offer large amounts of coverage at very affordable premiums. So most clients we speak with are actually quite surprised at how low cost term insurance is in Canada. So if your goals include long-term wealth building or a tax-free legacy creation or access to cash value in retirement, well, then you might want to explore a whole life insurance or a universal life insurance, which offer lifetime coverage and estate planning benefits in addition to the death benefit. At Safe Pacific, we'll help you decide whether term or permanent or a combination is best according to your current situation and your long-term goals. Now, don't leave your family's future to chance. The reality is most Canadians are underinsured, and unfortunately, it's often not until a tragedy strikes that we realize how important the right coverage is. So use this formula to start thinking about your own need. So when you're ready, contact us. We'll run the numbers together and we'll build a custom life insurance strategy that's designed to pay off all your debts, to replace your income, support your children, and preserve your legacy. Now, should you get term insurance or whole life insurance in Canada? Well, when it comes to choosing the right life insurance policy, many people ask us, should I get term life insurance or whole life insurance? And the answer really depends entirely on your financial goals, on your family situation, on your stage in life, and how long do you need the coverage for. Both types of life insurance serve important but different purposes. So it's critical to understand the pros and cons of each. So what is term insurance and who is it for? Term life insurance is designed to provide affordable, temporary protection for a specific period, which is usually 10 or 20 or 30 years. And it's often used to cover a large financial responsibility that's expected to go away over time. So this could be a mortgage or a line of credit. This could be raising young children or funding their education. This could be replacing lost income during your working years, or covering a short-term business obligation. So because it doesn't include an investment or cash value component, term life insurance in Canada is significantly more affordable than permanent insurance, which makes it popular for families who are just starting out or anyone who's on a budget. However, once the term ends, the coverage expires, or your renewal premium may increase dramatically based on your age and your health at that time. So what is whole life insurance and who should consider it? Whole life insurance, on the other hand, offers permanent, lifelong coverage, and it's ideal for people who are looking for a guaranteed, tax-free death benefit, no matter when they pass away, long-term estate planning strategies, tax-sheltered investment growth within the policy, and the ability to borrow against the cash value. So also if you want to create a legacy or a charitable donation. Unlike term policies, whole life insurance includes a cash value component that grows tax-deferred over time. You can access this cash through policy loans or withdrawals for emergencies, for retirement income, or even large purchases, making it a living financial asset, not just a death benefit. At Safe Pacific, we often recommend participating whole life insurance, which pays an annual dividend based on the insurer's performance. So this further accelerates the cash value growth and it provides additional long-term security. Now, why many Canadians use both term and whole life insurance? And for most Canadians, especially those with families and businesses, the best strategy is a blended life insurance plan that combines the best of both worlds. And here's how that looks. You want to use term insurance to cover the large time-sensitive obligations like your mortgage, children's education, or business loans. And you use whole life insurance to build permanent coverage that supports estate planning, wealth transfer, and tax minimization. So this dual approach allows you to maximize your protection today while building wealth for the future. Other key factors that affect how much life insurance you need in Canada, while your income and debt are a starting point, a full life insurance plan should also consider your business ownership. Do you own a company? You may need a buy-sell agreement funded by life insurance. You may need a key person policy to protect your business. You may need a way to extract retained earnings tax-free while using a corporate-owned life insurance policy. And we've got a lot of videos here on our channel about this. You also want to consider your family size and dependents. So more dependents equals higher coverage needs. So you want to ensure that your spouse can maintain their lifestyle, or that your children can have access to education funding, or that your family isn't forced to sell assets to cover expenses. You also want to consider long-term goals. So that asks a question like, do you want to leave a legacy to your kids or your grandkids? Do you want to donate to charity? Do you want to fund a trust or education plan? So these goals can shape the type and the amount of life insurance that you need. You also want to think about retirement and investment planning. If you already have RRSPs, a pension, or a TFSA, well, that's great, but will it be enough? Permanent life insurance can provide a tax-free death benefit to offset capital gains. It can supplement your retirement income through policy loans. It can act as a stable financial pillar alongside your other assets. And what you really need is a custom life insurance strategy that's built for you. So there's no perfect number that works for everyone, but with the right tools and the right advice, we can help you calculate the amount of life insurance that makes the most sense for your life, for your goals, and for your budget. We offer a customized life insurance planning for Canadians. We offer whole life and term life insurance solutions from all the major Canadian life insurance companies, and offer tax-efficient insurance strategies for business owners, and legacy planning and estate protection. So let's build your life insurance plan. So if this is something that you're looking at doing or you're thinking about and you want to work with somebody who's good at setting up life insurance plans for Canadian families and for Canadian business owners, schedule an initial consult with us through our website at Safe Pacific. You can fill out the form on there, and then that'll come straight to us. Someone on our team will reply to you within 24 hours on business days to set up a time to meet. For that first meeting, we'll get a better understanding of your current situation, of your goals and your concerns moving forward. And then from there, we'll run life insurance pricing quotes with all the major Canadian insurance companies, and we'll come back to you with a proposal and some options for you. To take next steps, request a meeting time through our website at safepacific.com and we can get started. Now, before you go, if you got some value from today's video, please do all those things that the algorithm likes. Click on the like button, click on the subscribe button. If you have any questions, leave a comment below and we will answer those. But really, the next step, go to the website safepacific.com. There'll be a link below the video. From there, you can schedule a meeting with us. And if you like this video, please stay tuned for our next one. That's it for today, and I will see you next time.